All attendees are in listen-only mode.
Good day, everyone. As I wrote in an earlier report, NVDA traded lower after earnings due to its data center revenue, crucial for AI growth, that slightly missed analyst forecasts. And further, guidance did not provide the blockbuster upside that hyper-bullish investors were expecting. Nevertheless, the CEO noted demand is, quote-unquote, extraordinary for NVIDIA's new Blackwell chips. He said that Blackwell is the AI platform the world has been waiting for, delivering an exceptional generational leap, and production of Blackwell is ramping at full speed. Now, while some commentators have warned of froth, NVIDIA's returns haven't actually kept up with its 12-month forward earnings estimates. An analyst at Wedbush put it this way. He writes, with AI infrastructure investments continuing to grow, with the company expecting between $3 and $4 trillion in total AI infrastructure spend by the end of the decade, the chip landscape remains NVIDIA's world, with everybody else paying rent as more sovereigns and enterprises wait in line for the most advanced chips in the world, unquote. Nevertheless, we put out a report on NVIDIA as a short sale possibility since it did break its 50-day. And as we've always said, when it comes to trading, it's all about the setups, fundamentals be damned. Now, foreign central banks.
Hey, Chris.
Yeah.
Can I interrupt for a second? If you look at the NVIDIA chart, you're actually in a perfect short sale entry spot using the 50-day line as a covering guide. So I just wanted to mention that. Go ahead.
Perfect. Yeah, so foreign central banks, I'm sure you all have heard, they now own more gold than U.S. Treasuries. And this is the first time it's happened since 1996. So we're talking basically 30 years ago. And that marks a major global shift away from paper-based assets and toward hard assets like gold and potentially Bitcoin. Dollar debasement is the key reason, especially since the dollar has been debased at a faster rate since 2020, when COVID struck. There are also geopolitical risks given aggressive U.S. sanctions against adversaries, which increases the risk that treasuries can be frozen or confiscated. The rise of Bitcoin, along with gold, reinforces the shift toward assets not easily manipulated or printed, offering protection against inflation and central bank policies. Gold nor Bitcoin can be printed at will, nor seized as easily. And meanwhile, treasuries increasingly pay negative real returns when you adjust for inflation. As confidence in traditional currencies declines, hard assets become more valuable. This trend reflects deep concerns about the global monetary order, and it's likely to accelerate with gold and Bitcoin poised as preferred reserve assets moving forward. Nevertheless, expect turbulence ahead due to ongoing updates with President Trump's tariffs and Japan's bond market flashing warning signs with its 30-year at new highs in terms of yield. And this surge points to structural stress, policy uncertainty, and growing global risks, especially as Japan exits decades of ultra-loose monetary policy. Carry trades may unwind as Japanese yields become increasingly attractive compared to U.S. and global counterparts, which could trigger capital flight out of U.S. treasuries, spurring higher yields on the longer end of the curve. And these yields that we're seeing in the 30-year have not been seen since 2008. Interest rates are rising on the long end of the curve as the Fed prepares to cut rates later this month. The anomaly is due to deficit spending, which is out of control. We've got another $200 billion of bonds that was issued in just 5 weeks. And U.S. Treasuries require higher yields due to heightened perceived risk in holding them. And that's classically symptomatic of the long-term debt cycle being in its late stages, as Ray Dalio has discussed. Now, with the recent purchase of Intel, U.S. and other governments are now increasingly taking control of businesses and the economy. The part of the cycle that we are in is most analogous to the late 1920s. But it could be said that material gains from AI did not exist then. And back then, the Fed also killed the markets by not utilizing QE. Let's just say they didn't start the printing presses rolling until middle of 1932. about June of 1932. And that was the point at which the Dow Industrials had already lost 90% of its value. And then we had the New Deal laws that kicked in later in the 1930s, which further stifled productivity and dragged out the Depression. But in today's market, we're seeing that labor, the jobs data is weakening into rising inflation. And so obviously that's a worrisome concern, and it's further reason why gold continues to hit new highs. It's basically a tug of war between weakening economies, inflation, interest rates, and global liquidity. The latter, which tends to influence markets on a weekly to quarterly basis, more than the first three metrics, if history is any guide. Gil, how are you seeing things?
Well, this morning they jacked the market. Well, they jacked it overnight on an antitrust ruling against Alphabet. Well, against Google, actually, the Google division of Alphabet. And the judge, I guess, came out and it was less onerous than believed. They didn't have to divest their browser and some other stuff. Anyways, that got Google going. And of course, what does that do? That brings the NASDAQ up. What do we get up to? About 240 plus 240 just a little while ago, maybe less than half an hour ago. But that's what Google's doing. And so obviously, if that goes up, the indexes go up, the ETF's got to pile into the other names to maintain their ratings, and they all go up with it. So my thinking is, however, that this will play out as a short sale opportunity. So I have a bunch of names I'm going to go through in terms of individual stocks. You just saw NVDA, and it's setting up perfectly at the 50-day line. So you see here we have the MACD cross just occurred at about 1794 on the SQQQ. So I'm long that. We can look at some others and see how those are. And you know, if you're basically a dime up from your entry. So if you use that as your selling guide, let's say the 1795 level, say you're at 1805 right now, you could take a position and just run it tight. The SOX is moving faster though. And of course this would have NVIDIA in it, and you have the MACD cross right about here. There's a cross right there, so it occurs right around 742. And we're now up pretty good on that one. So that's doing very nicely. I'd also keep my eye on the VIX, which is incredibly low. It just crossed and posted a long entry. So some say that the VIX is merely manipulated these days, and it's not as reliable of an indicator of complacence in a market peak as it used to be. And that may be true, but we'll see how this goes. I mean, we did, if you look at this, you've had some massive moves in the VIX when the market's sold off. So I still consider it a decent vehicle with which to trade the short side of the market. And because stocks tend to correlate, and we see that this morning, Google goes up and the other big stock NASDAQ names go up with it. So they all correlate. And so if you want to short into the rally rather than trying to short Google, which could keep going higher, the other names may be vulnerable to selling. Once I think the ETFs get their weighting in it that they need based on what Google's doing, and then and the whole thing comes in, and so we see that happening in real time, right? In the SQQQ, and also because Google's not a semiconductor, it makes sense. The SOXS is another good one to play here, and it's actually moving faster, right? Because Google is not a semiconductor, and other big stock NASDAQ names like Apple, like Amazon, like Microsoft, like Tesla, et cetera, that may be moving up with Google or Alphabet are not. So that's where I'm coming from. Anyways, if we go to my daily notes short list, Applied Opto is a short here at the 50. I'm sorry, well, it was earlier near the 50, but now at the 200. And that becomes a covering guide. I think Apple should be watched because you have a left side peak here. Let me do this. You got a left side peak over here, which is at 235. Right now you're trading at 236.15. If you reverse back through that, that could be a double top short, a little mini double top. Airbnb, that's already down, triggered a 10, short at the 10 and the 20 yesterday, and then today it was shortable there again. AeroVironment, defense, and also they make drones for the military. Looks like a short at the 20-day line. It was already a short on last Friday at the 50-day line. You can see here where it reversed at the line. Booking, holding, just pushing back up into the 20 and the 50 after busting them yesterday. And the volume levels were running pretty good earlier. I noticed now you see my neon green volume bar, it's diminishing. So it looks like it may be running out of gas. Anyways, we'll see. That would be a short as close to the 50 as possible. You could use a 20 as well. And then that becomes your covering guide. I'm watching certain financials are starting to roll over. BlackRock gapped down to the 50 yesterday, but held because the market held up. But now it's rolling back through the 50-day line. Citigroup rolling through the 20-day line. Century Aluminum, this one, nice bounce, a moving average undercut and rally at the 50-day line. If it cannot get through 10 and 20-day moving average resistance, it's a short right there. So there you go. CF Industries rolls over through the 200. That's a short. Cleveland Cliffs is short at the 20. And yesterday, some of these were trying to pull off undercut and rally moves at the moving averages, mostly the 20-day line, I think, like Cleveland Cliffs was, and it's failing today. Okay, Commercial Metals did that yesterday and then runs into the 10-day line where it reverses. So that's what I'm saying. You can bounce off a lower moving average and right into moving average resistance where you can become a short, or the stock can become a short. And that's definitely the case here. Capital One rolling through the 10-day line. Watch this one. Consumer debt in the U.S. is over 18 trillion. It's an all-time high. So these guys, another credit card company, you might look at Visa and MasterCard. I haven't checked those charts yet, but Salesforce reports earnings after the close, up near 50-day moving average resistance. CoreWeave just breaking lower at the 10-day line. That's a textbook hot stock that plays out as a head and shoulders. Boom, there's your neckline. It breaks the neckline, but then it'll always rally back from there. That's why I never short a neckline breach. If I'm shorting something like this, I'm doing it as it's failing here on the breakout, which is up in here. So, but that's continuing lower. I mean, that's NVDA Ally, but a wildly overvalued AI name, as many of them are. The PE expansions have been absurd. Cisco Systems are short at the 20-day line here. You can see it reversing there. And they have, if you look at their fundamentals, putrid earnings and sales growth, but the whole thing that's been driving the stock for a while is the AI data center baloney. And we all know that that's not going to be as big as previously expected. So now this becomes a short. Oracle's another one like that. Corteva short at the 50. Deere are short at the 200. JFrog is short at the 10. Watch for a break through the 20 after that. Meta Platforms looks like a short at the 50. Nucor, another steel name, or another industrial metals name, I should say, that posted a moving average undercut and rally and then reversed. So here it triggers a short at the 20-day line after posting a moving average undercut and rally yesterday at the 20-day line. NVDA, like I said, a short at the 50. Ooh, NXP coming down. I saw this thing earlier today as it was reversing. Now you're below the 20-day line. In a hurry. Corvo also something similar there. You see how you got the moving average undercut and rally at the 20-day line, but then you reverse at the 10. Look for this type of setup. You may see it all over the place. Qualcomm is another one. The MAUNR, as we call it, in acronymical form, I think that's the right word. You had the shakeout yesterday at the moving averages, so that's an MAUNR, and then it reverses at the 10-day line. That's a short. Salesforce, again, how did that get there? ServiceNow hanging along the 20-day line. It will probably move in sympathy to Salesforce when it reports this afternoon. Steel Dynamics, another industrial metal, steel name, reversing at the 50-day line. That's a short. Walmart rallying into the 50 and the 20. I'm just watching to see if this reverses. Williams-Sonoma short at the 20-day line. Workday is another big stock, software name, cloud name, like ServiceNow. It will probably react in sympathy to Salesforce earnings this afternoon. So that's going to be one to watch. Let's see, what else we got here? Block, the old square, that's a short along the 20-day line. Zscaler coming back up. It reported earnings yesterday after the close and initially rallied, actually got up pretty high, I think up above 290. And then it opened up this morning at 272.50 and went down as low as 260.40. So now it's undercut all these lows and is trying to rally. So you can see you got a number of lows here. So it's undercutting those and rallying above them. Technically an undercut and rally move. If I was short the stock, obviously I'm going to cover there. And then we'll see where it goes from here. It'd be a big volume. I don't really know how much potential this has, because when you look at it, what are you looking at? You got a trailing 12-month PE of 84, and you've got a forward PE of 75. I don't know. It seems like the PE expansion is pretty large and therefore vulnerable to contraction. So, meanwhile, the place to be obviously has been, and it's an area I've been talking about for weeks, if not months, and it's continued to go higher. It's had its moments of correction along the way, but the miners, obviously, and you see today they're getting higher. I sold all my miners this morning, the last of them, into these runs, because I'll sell into extreme strength and then look to buy back on pullbacks. So we'll see if I'm right on that. But you can see B2 Gold reversing. Eldorado Gold is stalling. Equinox Gold is stalling. Could just flag up here. That's a possibility too. Fortuna is stalling. You can see the reversal bar. Goldfields is stalling a little bit. Narrow range. There's a GLD moving higher. Harmony Gold rocketing higher. They got creamed on earnings, and now the stock's just rocketing higher. How do you like that? And the move back up is faster than it was on the downside, I believe, because we're past this low. Yeah, wild. IM Gold stalling a bit. Kinross Gold, they seem to be slowing down, so we'll see what happens. But my thinking here is I want to look at this market on the short side. Maybe this rally today gives you that opportunity, but this has been the place to be. Thanks to playing this group and a couple other groups at certain times, like the drones, like the quantum computers, I'm up pretty big for the year. We'll see how that goes. I'm not saying anything about any percentages, because the last time I did, I jinxed myself anyways. But this has been a big part of a good year for me so far. So knock wood. Anyways, where else? What else we're looking at? Okay, you got silvers. Another place to be. Silver making all-time highs. So let's take a look here. First Majestic. Now this is the closest to a long entry. You had a big pocket pivot off the 10-day line yesterday. So if you're trying to get into the space now, you're late, right? Okay, well, this one, watch for another test of the 10-day line. It's probably in the best position. And I think that if silver, well, just based on the price of silver right here, right now, because you're sitting at, the futures are at 41.88. So that means you've got the spot price above 41 now, because gold, let's see, gold at 36.27. The spot price is well above 3,500. That's a new high, new all-time high for gold, and it's probably going higher. So silver is going to go along with it. It's going to 50. That's the first stop, and then I think it eventually goes beyond that. So silver miners should go higher, and obviously some are moving better than others. Buenaventura, they've got a copper mine down in where, I forget, that they're Antofagasta is the Argentinian company working with them on that, but that's acting well. That's extended though. Endeavor Silver, see, there's a nice reversal, so we'll watch to see how this acts coming into the 10-day line, as with First Majestic. And Hecla Mining, again, you see it slowing down. Interesting, though, silver is up another 29.30 cents this morning, and these are starting to back off. And I think part of that may be because the market's starting to get concerned about a deeper general market pullback, which generally means that if margin calls start getting hit, you're going to get forced selling, and that's going to take everything down with it. And my thinking is that it's maybe better to own the metals. So I'm actually still long silver itself. I have the PSLV. I don't necessarily trust the SLV, although you can trade it after hours and overnight on the XTO market. But that's probably where I would stay if I wanted to stay in the space, stay with the metals. And I'm heavily weighted there in my longer term accounts as well. So that's kind of where I'll stay for now. We'll see how this plays out. But they probably fare better than the miners as the miners get extended, because they could become a source of funds in the event that margin calls create forced selling. Okay, so keep that in mind. If you're playing the space, just kind of review where your out points are, So for me, I'll give you an example of one that I played very, very well, actually, and just sold it. Equinox. if you were still long this one, let's say you bought it down in here, you had the Bible gap up here and it's way up from there, your 10-day line would be a maximum selling guide. But that's a long ways down. So I feel a little better at least taking partial profits up here. And then if it settles back in, we'll see how that goes. But I think you have to be very cautious. I don't like this market on the long side at all. I would not say that Bitcoin is not a hard asset at all. It's an alternative currency. So I don't think in that sense it has the same status as gold. I don't know about silver. Silver is an industrial metal. But now we're finding out that China's been buying gold on the U.S. markets where it can. So we also know that India has bought more gold and sold treasuries. And so for the first time, you're now seeing the foreign central banks hold more gold than they do U.S. treasuries on their balance sheet. So this is a very interesting development, and that's what's driving the rally in gold. And I think if you do see a forced selling related pullback in gold, it's going to get bought at some point. So, stay alert, but be cautious. And if you are long anything, review your selling guides and just take it from there. I think we talked about, Oracle, that if you were long this one because it had followed the 10-day line the whole way, it obeyed the 10-day line. Once it violated the 10-day line, that's a sell, and it's going lower. So, that's what you do. You figure out where your sell points are and your trailing stops and work it from there. So stay calm and have a plan. Don't be reacting in real time when what hits the fan. Anyways, that's all I got, Chris. You got anything else?
No, I'm good on this side.
All right, good enough. Good luck, everyone. We'll talk to you later. The jobs number on Friday is going to be big. There are rumors that it's going to be ugly, and downside revisions for the prior months are going to be even worse. And the Fed's going to have to lower rates 50 bips as a result, 0.5%. We'll see. I mean, I don't think anything's set in stone, but I mean, who's Trump going to fire if we get another crappy jobs number? I don't know. Anyways, that's it for now. Thanks for showing up. We'll catch you next week. Take care.